everybody. Welcome back to the Lundquist Real Estate Podcast. I have a very special guest here with us today. I would like everybody to please welcome Jennifer Meijer from RUOFF.
How are you doing?
Wonderful. How are you doing?
I'm doing great. I appreciate you having me on here today.
Yes. So on our last episode, Ashley and I kind of touched base on first-time home buying and interest rates. So I brought in somebody that can definitely help us out with all of your questions for that. So where would you like to begin first?
Oh goodness. First-time home buyers, are one of my favorite things to work on because it's completely new. I get to help guide, get to help answer. Majority of the people have about the same questions, so I can probably touch base on those things. Let's see. Pre-approvals, like where do you start with those? I get people who will call and they're like, I need to look at a house. My realtor said to give you a call. I'm like, okay, great. Let's see where you are. Essentially, that's a borrower filling out an application, whether it's in person or it's online. The online technology is definitely becoming super duper popular. So I have a website for that. I send the link, I get their phone number, usually just text message it to them. They will fill it out. It's personal information like name, social security, date of birth, your banking information, your employment history. We're looking for 2 years worth of employment history, things like that. So those are a lot of questions that I get initially from buyers. Where do I start? What do I need? What documents? That kind of stuff.
And it's not as daunting of a process as they probably think that it is.
I don't think it is, but I do it every single day, so I know exactly what it is that I need. Everybody's situation is always a little bit different, but typically it's, a 30 days worth of pay stubs, last 2 years worth of W-2s, a couple bank statements, and a copy of a driver's license. That would typically get me started. Sometimes I need to dive a little bit deeper, collect a few more documents, but that usually helps me right off the bat get to go.
What is a piece of advice that you would give young first-time home buyers before they reach out to you?
Goodness. I guess not really to be afraid to ask me questions because you don't know what you don't know. So reach out to a professional, ask them. You can't just, I don't even know. Like you just don't know where to start sometimes, and you're flustered. So, that's my job. The professional, we get to help you.
Right. As far as interest rates go, that is a big question on every buyer's plate right now.
Yeah, definitely is.
I keep stressing, are they way higher than they were a couple of years ago? Absolutely. Yeah. Are they astronomically high? I don't feel that they are.
No, I don't know. If you ask our parents, they're going to tell you that they bought their house probably when rates were 14, 15, 16%, or they bought it on land contract trying to avoid the high interest rates. But average-wise, if you go back historically and look, usually about 6, 7, 8% is actually the norm. So where we are right now for a rate environment is pretty normal.
I said when I was talking to Ashley, because she's in that younger bracket, I told her that everybody is kind of freaking out over them. But I remember when I first started in the business in 2016, interest rates were about exactly where they are right now.
Yeah, they've kind of changed. When I first got into doing mortgages, it was in 2010. That was a little bit after the crash initially happened from 2008. So they were kind of in the, if I remember correctly, about the low fives, and then they trickled down into the threes. They came back up. They were low fives, fours for a really long time, and then they went back down when some things happened, COVID, whatnot. So that's not normal rate environment, but this tends to be more of a normal rate environment.
Okay, so not every loan is the right loan for a buyer. There's not one loan that fits the bill for every buyer that's out there.
Absolutely not.
So I think that you being able to do all of the different styles of loans, you're going to be able to help us dive into the differences in some of those loans today. So, why don't you take off on some differences between, say, FHA, USDA, and your conventional?
Sure. So everybody loves the conventional because that seems to be the easiest. That's the majority of the sellers would probably prefer that, in my experience. People shouldn't be afraid of the government loans, though. They're not that big of a deal. Again, I'm used to doing them. I know what to look for, that kind of stuff. I can help give advice if somebody's selling their house, saying, hey, these are the list of things that you should look for around your house. Fix them up. If they're simple, peeling paint, really easy to fix. If you need to put up a piece of guttering, put it up, make it so that it opens. By offering those other loan products, you open your home up to a larger group of people to be able to come in and make an offer. So on the conventional loans, you can go down as low as 3% if you qualify. There are some stipulations with that. There's even 5%, so different ranges. And then you can put down more if you want. And then let's see, there's the FHA loans. That is another low down payment. It is 3.5% down. That one, the homes do need to be in a little bit more particular of, condition. We're talking about the peeling paint. You can't have broken windows. You need to have handrails on. Again, I have a whole entire list. It's really easy. When I send you guys the pre-approval letters for FHA, USDA, or VA loans, I actually attach that list of suggested repairs along with it. So you guys know what to watch out for. So the buyers know what to watch out for. I love that list. It's helped us, get lots of loans closed actually that are FHA, just so that people aren't wasting their time putting an offer in on something that should not have ever been offered. Like, they should not have accepted an FHA offer. So USDA loans, they are 100% financing, and that would mean that you don't have to actually have a down payment. Now, you do have to have enough money to cover closing costs and prepaid items. Now, you can negotiate that with the sellers, and they can actually help pay some of your closing cost and prepaid items up to 6% of the loan amount, of the purchase price. I said that wrong. And then if the appraisal is actually higher than what your purchase price is, there's also a way that you can put some of those closing costs back into the loan as well. Again, completely depends on what that appraised value is, though. On VA loans, now you do have to be a veteran and qualify for those. That's 100% financing as well. Great products for our veterans to be able to use. And you let me know that you're a veteran. We run your information particularly pertains to a VA loan, and we go from there. A couple other products that we offer at RUOFF are renovation loans and construction. So
those are a big deal, actually. I've seen a lot of issues running into something where they wouldn't have been able to purchase the home without you offering those products.
There's some renovation ones. Like it's just, they're really nice to have. There are a few extra steps that you have to take to prepare for those renovation loans and construction. You need to know what company you're going to use for the repairs or the construction. So we would walk you through that as well.
A couple of things when you were talking about the VA loans that I think are important points that are a little different with that product than other things would be the water tests and those kind of things that they have to do with those loans.
Yeah, so if it is not on city utilities or it has its own septic system, you do have to have a water test done to make sure that the water doesn't have any lead in it. We test for nitrates, nitrites, bacteria. Some of those things are also done on the FHA and USDA loans as well. If they're on the well and septics, there's some distance requirements that have to be met. So with those distances and stuff, I do try to give you as a realtor an email. I'll shoot you, say, hey, these are the requirements. You might want to double check that the house will meet these distances that are required. I'm trying to think. What as a realtor, what have you guys run into when you guys are doing the government loans?
Government, I remember hating them when I very first started the business. Because you were always sitting there looking, okay, this buyer, you're going to have to stay in town because, and over time I have learned that it is not as big of a deal as what it originally was.
Yeah.
The distances in the septic system and the well is one thing that I always look for. I will say the peeling paint hurdle, there are way more buyers and sellers that are willing to take care of those small little things.
Absolutely.
I think the biggest issue today that I say that I run into on some of them would be like your random chicken coops that are not going to pass.
I have lots and lots of peeling paint on them that nobody scraped for a long time because they're just like, it's a chicken coop. We don't care what it looks like.
Chicken coops and sheds, those kind of outbuildings that you don't think about initially.
You just don't think you don't look at it every day. You don't like, it's not something that people think that that's part of the property because it's sometimes you can remove them, sometimes you can't. So yeah, I would agree. I get some questions on those. The big old red barns sometimes around here in our area are a question. So
yes.
Yeah.
I literally, actually, once upon a time had a client that was a seller.
Yeah.
And there was a chicken coop on this property and it was going FHA. And we called him and we're like, chicken coops got to go. So he owned the lot next door and literally took his tractor down and pulled the
and
chicken
just moved it up. See, it worked out. It worked out. So there's always a solution. And I think that's the biggest thing that we have tried really hard in our community to overcome is the negativity towards some of those government loans, because like you said, at first you're like, this is so daunting. We're never going to make this work. But if we all work together to figure out a solution, especially if you can work on it, maybe even before an offer's made, like, you have a buyer who's super interested in a house, and the wiring is kind of old, and you get some quotes and you're like, okay, that wasn't as bad as we thought it was going to be. They go in and fix it before we even get the appraisal in there. I've had all kinds of situations where I think people are just starting to be really super proactive on trying to, these are the issues that could come up. Let's go ahead and do them. And then they don't become an issue and we fly through from application to close, So, and I want to work with everybody and make sure that we're doing what's best for the buyers in the long run. So
I would agree with all of that, definitely. I think the education of the realtor involved is a huge portion of all of this. If you're taking somebody to show them a house that is never going to pass FHA and USDA, it's upsetting the clients, and it's
why did we walk in here? No.
it makes a really bad process for everybody at that point.
Yeah. And I'm not saying there aren't things that aren't going to pop up. I mean, we can do everything that we can possibly do as lenders and as realtors to prep and prepare. And there's always going to be that one-off where something just happens. It does. It is what it is. And we just kind of got to go with it and keep a positive attitude. And our end goal is to get to closing for everybody. So that's, I think, something that everybody's doing a really good job on.
Another thing that I kind of touched previously on is finding the right lender and the right realtor for your specific needs. I think we have a tendency to get not necessarily a bad taste in our mouths, but there are a lot of fly-by-night mortgage companies that will instantly give you a pre-approval without vetting the buyer. And so maybe we could touch base on how your process is a little bit different than just saying, here's your pre-approval letter.
I don't hand them out like candy. It's not something that I have ever gotten into a habit of doing. When I do a pre-approval, I get the borrower's information, we run credit, we check that out. If everything looks good, we move forward with the documentation and stuff. Typically, I've already told them, hey, this is what you're going to need. So they can start uploading, or they can drop it by as soon as they can. I do verify the income as much as I can beforehand, because that's one thing that's going to say, hey, this is how much you can buy. This is the price range you need to be looking in. I also have a discussion with the buyers on like, what's a payment that you're comfortable with? Because if you're ultimately not comfortable with the payment, if you really want something that's around $1,000 and you're wanting to look in the price range that your payment's going to put you at $1,600, we don't want to do that. I want you to come back to me again. I don't want you to have a foreclosure. I want you to be happy with the service. I don't want somebody to come back, why did you let me do this? So I do have a conversation with people. We use gross income instead of net. When you're making a monthly budget, you're making that budget off of your net income. So your income that you're bringing home after your taxes and stuff. But I'm allowed to calculate income based off of your gross income, which can be 30-40% of a difference. So I don't want to put you in a product in a price range that ultimately we're setting you up for failure. Maybe I know that sometimes we're like, oh, in the long run I'll have a job that's paying XYZ. Okay, but for the moment being, how comfortable are you with that payment? So we want to make sure that's something that we have in line and we discuss. But that is a big thing for you guys, knowing where to start showing people the houses at. So that's what that pre-approval allows us to do, is verify that income. I look at where your down payment's going to be coming from as well. Are you using gift funds? Do you already have the money saved up? Or do we need to look at a down payment assistance program? We have a couple different programs with RUOFF for down payment assistance. One is through the IHCDA, and another one is RUOFF's own branded product. It's RUOFF Home Now. So it's a second mortgage. It helps cover that down payment. The IHCDA is like I said, funds to help with the down payment. It's actually 6% of the purchase price. So if you have a down payment requirement of 3.5%, 3.5% of that 6% that you qualified for gets to go towards the down payment. The rest of it can help cover any closing costs and prepaids. And if the sellers agree to help even cover some of those closing costs and prepaids, you may not have to come to closing with any funds. So it's great. We have options for everybody, whether you're a repeat buyer or a first-time home buyer without a whole lot of money to put into the transaction. So I love helping people buy a home.
I love the process that you use. I know when I send a buyer to you that if they have a pre-approval, they are legitimately pre-approved.
Right.
A lot of those, as I call them, fly-by-night mortgage companies,
Those
do not
qualifications.
do that. They don't do it. Another thing that I can appreciate is if that buyer is right there on the fence and you have to give them bad news, you're more than willing to, I don't know, coach them into what they need to do so that in a year or even if it's 5 years, they can still purchase a home.
Yeah, I love being able to go, okay, you think you're so far away from buying a home, but really you're not. If you take these steps here in 6 months, maybe a year, maybe 2 years, like you said, even 5 sometimes, if you set up a plan and you stick to it and you do the suggested items that I go over with you, typically people come back and they're able to buy. Like I said, sometimes it's only a matter of 6 months. Sometimes it takes a little bit longer. I have worked with borrowers for multiple years where they finally were able to buy a home, but then it just took a little bit longer for them to find what they actually wanted because they just, we waited this long. We're not going to settle for what we want. And originally, okay, we finally get you into this product because that's what your credit scores allow for. But by the time they found it, they were in conventional and just had to do a low down payment or use gift funds. Like there's always hope for everybody. So Even if you've had a bankruptcy, you know, that does not keep you from buying a home. There's just certain guidelines that I need to follow, and I let you know, and we go from there.
Sitting here thinking about it,
Mm-hmm.
it just popped into my head. So, FHA,
Mm-hmm.
the one thing that I think, number one, a lot of agents
Mm-hmm.
forget,
Mm-hmm.
and because we just don't run into it that often,
Mm-hmm.
and buyers don't know.
Mm-hmm.
If a home is purchased
Mm-hmm.
by a flipper,
Yeah.
what is that wonderful FHA rule?
So if you're flipping a home, you do have to have ownership of that property for at least 90 days, ideally 6 months, but there's some specific requirements. So you have to have it a minimum 90 days. When I started doing FHA on a more regular basis, those little regulations, you gotta know them. And sometimes experience really is the best way to find out about something. And you don't forget.
You don't forget that after you've had that happen.
We're all human. We all make mistakes, and you'll have to start at some point learning your field. So it's, you know.
Well, I think the hardest part about it is, okay, this home is brand new.
Yeah.
It's going to pass all of the requirements. Yeah. Let's go look at it.
Yeah, exactly.
And
so
then
exciting.
You're like, oh no.
Oh, wait, we can't write this offer for another 30 days or 45. Okay, so I know, you know, we've had instances where that's come up, and we've caught it, and you know, we're reviewing stuff, and hey, my buyer's interested in this house, can you tell me XYZ, update the pre-approval letter, hey, did you know that the date of the last transfer was this for the deed? And so a lot of times we do definitely try to catch that stuff up front, so we know whether or not it's a good time to make an offer or not. So,
and FHA is the only one that has that requirement.
Mm-hmm.
All other loans,
Yep.
You're good to go.
Yep.
But and typically on the normal timeline, you don't run into it very often.
Mm-hmm.
However, you have those go-getter flippers.
I know. They just get in there and get it done and flip it, and we're ready to resell it. So, yeah, it does happen occasionally, but not all the time. So,
no. But very important for the FHA buyers.
Exactly. Identity of interest is another thing with FHA that people probably don't think about, whether you're buying from your landlord or like a family member. There's some special rules on that, on how much of a down payment you actually have to have for those. So those are things I have to watch out for. So sometimes I think people are like, why are you asking me these questions? And they make totally, no sense to them whatsoever. But for us on the backside, trust me, there's a reason. Just answer them and go with the flow.
Another thing that I have probably, I really try and pound it home to the buyers is being honest with their lender.
Yes. We're going to become like best friends. I mean, it's like we're dating. You're going to tell me all your secrets. No, not really that bad. But like, again, they sometimes seem maybe a little invasive, but I promise you, there is a reason why we have to ask. And if we know things up front, we can help solve and keep issues from arising down the road. If a lender is suggesting something, I would definitely, follow their recommendations. There's a reason why I'm offering it or somebody else is offering it. If we say we need documents, it usually means we need them ASAP, not to wait 2 weeks. That means sometimes we're closing on time or we're closing late, depending on how fast you get us stuff. I know that RUOFF's average closing days is 14, but, from application to close, we're closing stuff as fast as 14 days. Sometimes it's quicker. It just depends on how quickly everything moves. But our goal is to get from A to Z really fast for you guys. And if we're asking questions up front in that pre-approval process, it's to help keep us going fast during the actual process of, purchasing. So,
and I mean, I've ran into buyers that are just like, well, I didn't think that was important when we've hit this hurdle 5 days before closing. Yeah. So again, it doesn't matter it doesn't matter how unimportant the buyer necessarily thinks that that little piece of information can really hang it up. So I just tell everybody, be completely honest with she's not judging you. I promise.
I am doing it because I want to make sure that, okay, if this is going on, this is the steps that we have to take. If this is what happens, this is what steps. And then usually this, like in my mind, it's like a little jigsaw puzzle, and I'm putting everything together, and I'm looking for anything that could possibly come up and be an issue so that we can prevent that from happening. Gosh, I was trying to think, you were talking about issues that come up. You know, I have somebody who will sell something and they want to use that for their down payment or their closing cost. Well, I have to know that well in advance because you need to provide us with very specific documentation to source those funds. Cash, we cannot use, absolutely 100% cannot use that on a mortgage transaction. Everything has to be sourced. It has to be traceable. Cash under that mattress, not going to work. In a can in the garden, not going to work. My mom had money that she wanted to help give me to buy a house. That is awesome, but it has not been sitting in your account and sourced and seasoned and whatnot. So,
how long? How long?
Typically, it's 60 days or more.
Okay.
So that's what we're looking at. So we collect those 2 months bank statements. So we don't want, we're looking for large deposit, undisclosed debts, payroll deposits are on there, matching those up. And depending on the loan type, we may actually have to go a step further with sourcing where random deposits are coming from. You get a lot of transfers from Cash App and Venmo, and depending on the size of them, we may need to track where those deposits came from because everything has to be on the up and up when it comes to buying a house. So they're kind of particular.
Mortgage fraud, it's real.
Yeah, it really is, unfortunately. And I have people who check me and I'm checking you, and I mean, it just keeps going. Auditors and examiners and people who are just making sure that we are all doing our job right, and it's ultimately to protect the borrower and the consumers.
So, Jennifer, you've given us tons of information today. What is it that a realtor, what can I do to make your job easier?
Communication. Like, I am always trying to communicate and give you guys updates on your end and back to me. Or if you have somebody who's interested in a house and you want me to reach out to them, quick text message, email, hey, XYZ, this person is, trying to buy a house. Can you help guide them? Here's their contact information, or they're going to give you a call just so I have a heads up, that they're reaching out. So, sometimes things come up on the weekends. Sometimes they come up in the evenings. Obviously we all have lives outside of work, but we do work on the weekends. We do work on the evenings. I think I've taken your guys' call in the middle of mowing my pasture.
I know you have.
Like, hey, sorry, I missed your call. I'm out here mowing. And we sit there and have a 15, 20-minute conversation. Sometimes it's 5 minutes. It just depends. But it really is about communication and just knowing if you guys need me to look at something particular, like, hey, this is the house that they're looking at. It looks like it's going to pass government. It doesn't look like, things like that. But
from a realtor's perspective, you have no idea how much we truly appreciate being able to work with certain lenders that are not an 8 to 5. Yep. There are a lot of 8 to 5s, and when they clock out at 5 o'clock, it's done.
I try to think. Well, I closed a loan that we were trying to do before the end of the year, right after the beginning of the year, 2024, 2023, something like that. Anyways, I had everybody's timelines were trying to mesh up. I was on vacation because it's Christmas. We decided to take my kids to a certain place, and I'm walking through Kennedy Space Center trying to answer text messages and making sure everything's getting taken care of, and emails, and it's just part of it. If I know something's important to you guys and my buyers, or my borrowers, your buyers, I'm all in. I never want something to stop happening because I wasn't available. So it's like, I don't know.
And that was the point I was just getting ready to make. Unfortunately, the problems don't know that it's the weekend.
Yeah. So we keep working and we make it work. So
I truly appreciate that.
but something's always, I don't know. My priority is making sure my borrowers are happy and you guys are taken care of. And we, like I said, closing date for everybody. We get to celebrate and lots of excitement, new big steps for people.
That's probably one of my favorites.
Yes.
Is the excitement from the buyers themselves.
I want to celebrate that they get. I always joke, I'm like, I need a bottle of champagne and some like little poppers where it shoots out confetti. I think it should be celebrated.
Absolutely. Absolutely. Is there any other things that you want to make sure that the buyers out there know?
Oh gosh, just I guess if you don't think you can buy, reach out. Let's see where you're at. And if somebody asks you if it's okay to pull your credit when you're doing the pre-approval, you need to say yes, because you giving us general information is not going to allow us to help you the best way unless I actually have a credit report sitting in front of me. Everything's kind of a guessing game. So because I do get questions like, do you really have to pull my credit? I really need to, because what you're telling me may not be, like you said, you may not think it's important, but if it pops up on there and you hadn't told me, and then I've now said XYZ can happen, and you just can't, I don't know. So let us do those pre-approvals. Let us help you get us the documents that we need as soon as possible. And I'm here to answer questions. So I don't know. I want to be available for my borrowers and help them.
Well, and like we touched on a little bit ago, even if it is you're not quite there, you can give them the steps to be there.
Yeah, exactly. And pulling that credit report, that's going to help me see what's on there to be able to give you the best advice. So.
Well, Jennifer, I want to thank you a whole bunch for coming in and spending your morning with me.
Yes. I appreciate you asking. I was excited. Unexpected. I was like, ooh, never done this before. So here I am. I'm giving it a whirl. And I appreciate you asking me on.
Well, I, again, appreciate you coming in and talking to us. If anybody has any lending questions, Jennifer Meijer at RUOFF. Great phone call.
Yes. And we'll get you my contact information, so you can hand it out.
Contact me and I will get you Jennifer's info. If you don't, just Google it and find it.
I'm all over social media and Google. If you put my name in, Jennifer Meijer, RUOFF, Wabash, it pops up. JenniferTheMortgageLady.com is my website. Super easy to remember. At least I think it is.
Well, I want to thank Jennifer for coming in again. Thanks, everybody, for tuning in, and we'll see you again real soon.